Okay, as you can see from my screen at the moment, well, first of all, it's the 1st of December, so it's the start of summer, and the start of a new month usually is a very big week on the news front. The highlight of the week, as you should all start to know by now, is non-farm payrolls. Okay, and for us on the Aussie front, we always have the RBA announcement on the first Tuesday of the month. So a couple of the key events. In our time, it usually happens late Friday night. So this is the bit of the market that really makes the market move up and down significantly, and it's the trade balance, the non-farm employment change figures, and the unemployment rate figures that are a standout. Okay, for us, for the Aussie dollar, we also have tomorrow, we have building approvals, and we have the RBA announcement. And normally when the rate does not change, what really comes into play significantly is the statement that accompanies the figures. Okay, and just off recent times, the name slips my mind at the moment. I think it's Stevens came out and basically said that the government would not rule out the possibility of some kind of an intervention if the Aussie dollar didn't get back to acceptable levels. Okay, as we've seen, the Aussie dollar has been down, and pretty much his insinuation was that they needed to see the Aussie dollar trading somewhere around about the 80 mark or even below, and instantly at that kind of a statement, the market moved about 100 points. I recall that was about 2 weeks ago. Now, for this particular week, we did break an all-time low, or a multi-year low as they call it. We broke underneath 85. We've been calling this trade for a little while. When we get to the charts, we'll have a look at the technicals behind it. Hopefully many of you took the trade. As luck would have it, I jumped in on it at 84.80 and instantly it bounced back, but I stayed on the trade, and I think today we traded at 84.15 at some point. So that level is broken. That would make it a lot easier, and it will have a definite effect on the statement that comes out tomorrow. Basically, the government, it would be a lot happier the lower the Aussie dollar goes. All right, for the newer people in the room who don't understand the reasoning behind those comments, basically Australia is an exporting country. We are rich in minerals and commodities, so essentially we sell all of our commodities overseas. If our Australian dollar is too strong, we don't become a very attractive option for overseas countries to buy from us. So if it is cheaper by the exchange rate, it's a much better option to buy from Australia. The more we sell overseas, the more jobs it creates internally for more production, and money can be spent into the extraction of these minerals. So that is the logic behind it. The only downside is that it's not so nice when we go to Europe or to the US for a holiday because our dollar doesn't have the same buying power. Okay, but for this week, I think there's two pairs that are definitely under the spotlight. One is the Aussie dollar, okay, mainly because of the RBA announcements tomorrow. On Thursday, we also have the retail sales, and this number is very important coming into Christmas. Okay, into that Christmas period, because it's a number that's looked at with a lot of scrutiny, and if we have a look at also the other side of this pair, the Australian dollar, we have all the US data, which basically is the climax on Friday, and also these two over here, which is the pre numbers on the Thursday. Okay, the GBP USD is another one that's got quite a bit of data this week. So basically, we can see GBP data Wednesday and Thursday, and tonight we have manufacturing PMI figures. All right, so the ones that will have our attention this week is definitely the Aussie dollar and the cable, which is the GBP USD. All right, so keep them on your radar, and let us get started and have a look at, start looking through some of these charts. Alright, and we'll start off with the Aussie dollar. Now we drew this triangle last week, and actually I didn't get a single email from anybody that was tracking it. I don't know what happened. I saw it. I was waiting for someone to alert me to it. Basically, did anybody trade the Aussie dollar last week? Can I just get a show of hands? If you were watching, we should have got a successful trade out of it. We can clearly see this candle here is a definite breaking candle. It takes out the previous low. It closes below as well. So you could have either entered there, where I'm drawing the line right now, or you could have entered right there as you're breaking down. Either method would have been okay. Now, if we're depending where you entered, your stop as a bare minimum, your stop should have been in this area over here. Okay, that's as a bare minimum, but typically you would want to put it somewhere over this top side of the triangle. If you are a lot more conservative, this is your entry signal up there, okay, on the retracement and a bounce back. Either way, there was lots of ways to get into this trade, and those are the three that we typically talk about all the time. So you got one is your aggressive trader, two a little bit in the middle, okay, and three is your conservative trader, all of which basically would have given you a good trade. Now, if we try to marry up some fundamentals with what this trade may give us, let me just show you something. So I've only got one person that said they took this trade. Did anybody else take it? So Rick has taken it. Anybody else? By theory, we should be aiming for around about this much distance. We're working off a 4-hour chart just to make sure that everybody understands this. So that'll put me at around about 83. Okay, let me just measure a little bit better than what I just did. I just want to confirm a bit better. Greg's taken it as well. Well done. It's about 200, let's call it 270 pips. So we get him from around about there. 270 puts you in, yeah, about 83 even is the target. Now, we could hit this target tomorrow. All right, now tomorrow's a big news day. We could retrace back heavily tomorrow. If you're in this trade and you're already about 100 pips up, okay, now you're working off a larger time frame, so if you're already about 100 pips up, you may want to consider to remove some of the profit. Now, as I was analyzing the trade for what could be on the cards for us today, the first thing that hits me is, well, there's actually two things that I can see straight away. The first one is that there was a gap in the market, okay? Now, and essentially the market moved away from this gap, and it's only now, these are 4-hour candles, that we're starting to maybe try to want to come back. I don't know if it's going to happen, but anyway, there is a gap. The second thing that I notice is on my 4-hour chart is I'm starting to, although not confirmed yet, I'm starting to notice that there is the possibility of some divergence about to happen. Now, what could happen is if all of a sudden, as London opens now, and if the Aussie keeps dropping down, this will continue to make bigger lines, and then the divergence won't be there anymore. So it's too early to trade off divergence. All I'm simply saying is we need to keep an eye on it. Okay, that's what I can see. The third thing that I can see to try and plan how we're going to tackle this today. Now, first of all, if you're already in this trade short, be happy, and I would stay and I wouldn't do anything else. But if I'm not on this trade at all and I want to try and find ways to trade it, the other thing that I can see is I'm noticing there's a bit of a channel. Now, if there's too many lines on my chart and I'm distracting you, let me just delete some just so that it becomes clearer. If I show it to you like that, we can now clearly see that we are inside here. Okay, so what may happen is we may do a little bit of this. So what I would be looking for is every time we come towards this top, I'm looking to try and bounce back in, or I'm looking for the breakout. Now, considering that I'm very fundamentally short mindset on the Aussie dollar, the US dollar's just got so much strength at the moment. All right, and the Aussie dollar wants to go down. I'm trying to look for short trades. Okay, I'm deliberately looking on the short side. So I'm interested in that area there. All right, now if we break here downwards, that's not really a break of a channel. We're not interested in that. We're only interested when we break a channel and we create like a V. Like, for example, let me show you what I mean. If it breaks down, the theory is that you should be short on it already. And we're looking for V's, okay? So see this angle here, it's like a V there, or if it's like this, we don't really break into it that way. You want to go back against the grain. So this is not correct. It's like that, what we're looking for, okay? So I'm interested when we get to that area, all right? And I'm going to continue to monitor my divergence here, because if this does a little bit of this like this, we may get a little kick trade there, okay, depending on what happens over here. All right. The gap trade, I'm not interested in it today at all. All right, so this trade right here, to try and close that gap, I'm not really interested. To be honest, I kind of hope that it just drives back up, closes, and then drives back down. All right, does anybody have any questions on the Aussie dollar for today? Let me just have a quick look at something else on a daily chart while you type any questions that you may have. On a daily chart, it looks even better. Let me just get rid of those parallel lines for a moment. Okay, on a daily chart, we can see that we had a clear break, come back, hit the 13 EMA, retrace, target 1, we're on our way to target 2, so what you may want to on a daily chart now is wait for the pullback into the 13 and hit it again. Okay, so and if you look at my chart right now, you can see that on the daily chart there is no divergence. You can see that this is heading downwards, and so is the price. It was only on that 4-hour chart, but it's not confirmed in any case. All right, does that make sense to everybody? So we're pretty much short biased on this. If we get the data that we need tomorrow for the Aussie dollar, and then on Friday the US data comes in strong, we could be talking next week and the Aussie dollar would be at 82 or 83. Okay, now of course it is dependent on that data, but it's all possible. Technically, the technicals look good for shorts. The fundamentals are in our favor as well. If you're in the trade, just stay in it and just play it as you will. And if you're not, I've just shown you a couple of different ways that we can trade it. When we approach that channel on the 4-hour chart, if you need some help, send the screenshots and I will respond to you accordingly. Okay, other than that, one last thing. Let me just check one last thing. No, there's nothing really there on the fibs side. Let me just maybe shorts at 86, but it's not quite there, so no. Okay, so that's all I got for you on the Aussie dollar. Okay, I'm just going to redraw that channel so that I don't forget what I did. Okay, let's move on. Euro USD. Okay. The first thing on the Euro USD, I sent out a Twitter alert on Friday, I think it was, based on a price action trade that we had just recently talked about on Thursday. Did you guys get that? Who saw it? Who did not see it? Yep, Alex seen it. Okay, so Danny didn't see it, Phil didn't. Okay, if you need to look me up on Twitter. My Twitter name is ChatFX. That's ChatFX. All right, and then add me on to follow me. And then if you set it up via your phone, when I send something out, you'll get it like an SMS. You'll get it live. All right, now the trade that we talked about was, and it's kind of appropriate today, so we'll do it. We're definitely on our Euro USD. Obviously we're in a downtrend, okay? And what I said was, when we're looking at price action kind of type of trading, is I need you to try and trade with the trend and look at the area where the pullbacks occur. And the easiest way to do that is add a fractal indicator to your chart. And then when you're in your downtrend, for example, what you need to do is on your daily chart is go back, and every time it pulls back, you need to look at these areas here, what's happening in these areas there, and that's where we're going to find the trade. So what we did was, I'll just zoom in. And if we have a look over here at this combination here, we had an inside candle. This candle, the red one, is inside the other one, and then when this next candle here started, the second red one, we broke out of the range, which basically gives us a signal to trade down. Okay, so, and if you did that, this trade, it's not very far into the green. It's about 25 pips up, but that's the trade that you're looking for. Typically, you can place, if you want to be very conservative with your stops, you can place your stop just above that fractal, okay, because in theory is, if it stops you out, it hasn't worked. If it's very close and there's another one close by, you can go to the next fractal, all right, as your stop, and the idea is that we're trying to catch the pullback and the momentum to trade downward. Okay, so that's the trade, and that's what I sent out last week. If you need to review it, the recording is posted in the members section of the website, so feel free to go have a bit of a look. But that's that. Now, what I also noticed is that the Euro USD is consolidating quite nicely. Okay, you can see there are two areas. Now, just one moment, I just got a question here. Does an inside bar have to be in the body, or can it have, okay, the inside bar, give me 1 second, I'll answer this properly. Just bear with me 1 second, guys. Okay, this is how it works. It can be, basically, it has to be contained within the previous, I'm just looking for my pen, sorry, just 1 second. It has to be contained within there, and there. It's nicer when it's also contained within the body, okay? But it's not a requirement, all right? So when this one we called candle number 1, and this one is candle number 2, once we have the combination set up, and candle number 3, which starts over here somewhere, basically when candle number 3 breaks out of that range, we trigger a trade. Okay, now we use the trend to identify which side we're interested in the trade. So let me just show that back. So in this example here, okay, we are only interested, there's the 2 candles right there. Okay, you can see that this one is candle number 2. Oh, it just moved on me. Hang on a sec. So there's this one there is candle number 2, and it is contained within that parameter. All right, and the way that you trade it, I'll just zoom in a little bit more so we can clearly see it. As soon as we break that or this little line there, you take a trade. Now, this way, we're not interested in that trade, so had this candle broken further up, well then that instantly tells you that there's nothing to do. Just ignore it all. But the one that we want is down because the trend was coming down. Okay, so and in this particular occasion, because this candle here that I'm pointing to right now had such a short bottom wick, as soon as the next candle started and it started to go down, it took out the low, it triggered a trade very, very quickly. Okay? Does that make sense for everybody? Yep. Okay. Fantastic. Okay. All right. Someone's made a comment. Karen says she doesn't trade on Fridays. Fantastic. If that's one of your rules, then just ignore it. Now, when I have a rule that I don't trade Fridays and Monday, to be specific, I'm only referring to day trading. Okay. So if I'm trading off a daily chart, I'll trade any day of the week. All right. So I just want to let you just clarify that, just so that everybody understands that. Okay. All right, so what I can see this week is you can see that we've consolidated into that first box, and then we've slipped down into the second box, and we're still in here, and I think we got a pending order. We've got a straight break trade down here somewhere that we've got a pending order. Let me just double check. Oh, hang on, I've got to change accounts. One moment. Okay, I can see my pending order now. We've got a pending sell at 123.45. I still like that. Okay, so I'm going to keep it. So if you weren't in the class last week, we've got a pending sell stop on the Euro USD, and what we were trying to do last week was we were on this big red candle here somewhere, and we were hoping that it would break down. It didn't. It held. It's coming back again. It's going to test it again, so we'll keep our order in the market. All right, and let me just check what we had for settings on that. 23.45, and we've got a stop loss of 26 26.05. So what's that? Can someone work it out? That's a lot. It's about 250, and we're going for about 280. Okay, so stop loss 26.05, target 20.85. So it is a longer term trade. Okay, so we might get triggered this week. Karen is saying, is the divergence an issue for this trade? Well, let's have a look. All right. It's a good point. I think this bottom oscillator kind of works a little bit lagging. Okay. This bit here and this bit here, it's kind of related to that. All right, so there was a bit of divergence, but we've already had a bit of a kick. So I need to wait and see what happens when it comes back again. All right. Look, it could be. So if you're someone who just places an order into the market, the order that I've placed, I'm happy with it, and I'll just have to wear it. Okay. But if you want to see how at the time of execution, how it's panning out, what I suggest is put an alarm very close before you get triggered into the market, so then you can go and check on the trade before you get triggered. Okay. But at this stage, I'm not super concerned about it. We're still far away, and I think if we do come down, this will start to shape down, and usually the way they look is this will come down there somewhere, and then these will start looking like this, and you'll find that they match up. Okay, so for the time being, I'm happy with that on the Euro USD. All right, does anybody see anything else on the Euro USD or something that someone wants to comment on? We are at a very nice holding pattern. Okay, we've been coming down quite a lot. We understand that. And at the moment we're consolidating, but still looks a lot of pressure on the downside. The US is quite strong at the moment. The euro, the fundamentals on the euro is that they're receiving a lot of pressure, that they should start to incorporate some kind of easing or quantitative easing policies. The reality is they haven't done it as yet. They've talked about it. Every time they talk about it, it moves the market, but they've not actually sat down and started to say, on this date we're going to incorporate, or we're going to have a meeting about it, or they haven't gone that far as yet, other than that Mario Draghi is getting a lot of pressure and to basically do something. Okay, so until something happens, we're still on this. 120 still looks good. Okay, and that's what we're going to try and trade. We're going to try and trade it all the way down there, but we just got to wait to get triggered into the trade. All right, let's move on. GBP USD. Okay, GBP USD. From my chart right now, can everybody see there's one thing that I don't like about this setup? Can anybody spot it? I'm on a 4-hour chart, by the way. If you can see it, just type it in. Oh, very good work, Rick. We've got a broadening price, so our trading area is expanding. We can see that we clearly defined a consolidation zone. Okay, then we went out, we took out the high. Okay, and now we've just sneaked in, and we're trying to take out this low. So if this price drops a little bit more on us, the only thing that I can see is that we're going to have to sit out on the sidelines and start to look for the trading range to come back, and let's see if it does some of this before it sets up our next trade. All right, now you guys have watched me do this for quite a long time. You know, we do it all the time. The market expands out, and you can start to see how patterns continue to come up in the marketplace. It expands out, and then we call it, and then we watch it, and then it starts to come back in again, and then we try and find the trade. If you have a look at that Aussie US dollar, that's exactly what it did, and it's not the first one that we've watched. Let me just have a quick double look. Okay, if you look out through this area over here, through this little area here, we got, oh, sorry, that chart just moved on me. Okay, you can see throughout this area here, we had the areas defined, and then we went out and took out a higher, and then we took out lowers, and then basically from that point we started to draw that drew that a bit crooked. We started to draw that triangle. Okay, so this pattern happens all the time. All right, so the earlier you can see it, the better you are prepared for the trade, and the more confidence you will have in this type of trade when it comes up. All right, so it's still very early, but right now, look, if I was going to take any trade, it'd be a short, but I'm not doing anything on the GBP USD right now. Let me just check a couple of other time frames. Okay, on a daily, it looks like it's ready to continue to break down. You can see it. Let me just delete that. Let me add a 13 EMA so that we can all see what we're talking about. Look where we are. Look where we're sitting. Let me add a fractal indicator as well. Okay, so that candle is the one that I'm looking for. Let me zoom in. Okay, this is not quite an inside candle, not quite. But this combination here, you know, it wouldn't have been the worst thing in the world to attempt a short on this particular candle right there. It's not quite an inside candle. It's very, very close. It is on a downtrend and it is on a pullback, so it is a very, very nice spot. So I just want to draw your attention to that. But if I zoom out a little bit more and we do classic breakout trading, what have we got? Look what we've got. There's my consolidation. We break down, we pull back, we take a trade, we pull back, we take a trade, we run with it. Now, if you didn't take this one here, you know, and you didn't take it there either, I would hang off, okay? But if you did, this is the kind of trade that you want to continue with it and keep taking little bites at it. It's the same principle that we use on a London special strategy as we've affectionately know it. The only difference is we're working on a daily chart. Okay, so right now all I can see on GBP USD is downward pressure. If you're not in it, don't jump on it right now. Okay, we are getting close to that 155 half decade number, and we could get some kind of bounce off that. All right, so is anybody in this trade, by the way? Is anybody in GBP USD and they want to share? Still, the number one thing that I see on this is that we are expanding our trading range, and now I'm going to want to start to look for that range to start to converge again. Okay, so for this week, GBP USD, I don't have anything, all right, other than we need to wait it out and see what pops up at us. Okay, let's carry on. Gold. Finally, we had a superstar trade for the week. Is everybody out of this trade, by the way, now? I know there's a few people that took this trade. Can I just get a show of hands? Who took it? Who made a nice profit? I think, what did we make? We made $264 on that trade. So that's the equivalent of about 260 odd pips. Okay, so Lois did, well done. Brett did, yes. Bijan, did you trade this? I know you love gold. Okay, so basically we took, now that pattern's just redrawn a little bit differently, but essentially what we took was, we took a bearish Gartley trade, which was, sorry, this is the wrong instrument, apologies. Give me 1 second, guys. Okay, that's better. We traded it off a big round number, which was 1200. Okay, so now you had to hang tight on this trade because the profits really only came late Thursday and Friday. You can see all this area here. We were bouncing hard off that 1200 level, all right, before it came down. All right, so that trade's gone. Let's see what we can see on it this week. Let me just get rid of some of these indicators and freshen my chart up. Actually, looking at it right now, it's looking pretty messy. Like, I don't really want to trade it right now, to be honest. Oh, I've got a problem on my chart. Gold, we'll sit it out this week, okay? And look, there's a couple of reasons. The volatility that's being caused at the moment with oil, okay, and all the turmoil that's going on there, it's kind of affecting. This is a pretty big, decent move that we've just taken. Let's just wait and settle, and let's just see what comes out of this. Okay, so at the moment, let's just sit out. Gold, nothing this week. All right, does anybody have any questions on it? Yes, Brett's saying the Swiss referendum as well. Basically, for those who don't know, the Swiss are having a referendum whether they should increase their percentage in gold holdings. Okay, now if it comes back that they should increase their holdings, basically what it's going to mean is they're going to have to go and buy it, which is going to cause it to do a little bit of that. Okay, the vote, yeah, that was last. Oh, was that last week, over the weekend? Brett, can you just confirm for me? Yesterday. Yes, yeah, it was over the weekend. Today's Monday. Okay, so it's come back as no, and which kind of explains that little bit of a gap this morning. Okay, so there's just a lot going on here. We've just taken a nice trade out of it. Just walk away from it. There's nothing. Don't try and just trade an instant rejection as well. Murphy's also pointed out that India has had their issues with the gold situation on limiting their imports. Okay, so it has been a volatile week. We traded it, the fundamentals helped us, and we move on. All right, let's have a look at it next week. All right, what have we got next? US yen. Okay, the US yen is ready to have another attempt. We are at 118.84. Okay, on a daily chart, this is what we look like. I still don't want to trade it short, not at all. I can see that it's having this little breather up the top here, and I truly believe it's going to try and get very close to that 120. All right, I think once we get to that big psychological number, and a lot of orders get taken out of the system, I don't really want to trade it technically on anything else. All right, so because I'm not in on it, I'm just going to sit this one out. There is a lot of upward pressure. It does have good merit to go long on it. How far can it go? I don't know. Non-farm this week, so it's really going to shake it up. We'll just have to wait and see till next week. All right, but 120 is definitely on the cards. Been saying that for a little while now, and we've been creeping up on it, and it looks like we're ready to make. Think of it like you're trying to climb Mount Everest, and you have those base camps along the way. It looks like it's just about to leave that base camp and head for the next leg. All right, so if you're not involved in this trade, just watch it, just so that you get some valuable experience as to how much the market can move in one direction exponentially with virtually having no breather. Okay, so, and that movement, we're talking, even if I look at it from down here, that's 1,300 pips. And if I go back a little bit more from down here, we're talking about 1,700 pips, although that first leg had the breather, but from over here, there was virtually no pause for air, just one direction exponentially. All right, markets can do this. If you get caught on the wrong side, accounts do blow up. All right, so this week also on the US yen, I don't have anything. I'm a bit light on trades this week. We'll see if we can spot a couple of things, but I don't want to just take a trade just for the sake of taking a trade. All right, so US yen, that's all that I have. If there's no point running a fib on this one, I've got levels, but they're so far out of the money that they're not even worth placing. Okay, so I'm just going to leave it for this week. Let's have a look at the euro yen. Okay. The euro yen is now, I think, starting to get into that area where it's congesting up, and the yen has started to show a little bit of sign, a little bit of data starting to come out that it's not as dark and gloom as they thought it was. The euro is now starting to talk about quantitative easing measures, and these bits of information are both contributing to the fact that the euro wants to come down and that the yen's getting a little bit stronger. Okay, so it's kind of in that hazy area, and the market's starting to give me a little bit of consolidation, and you can see it basically. A big clue for this is when you start to see inside candles upon each other, and they're not quiet, but there's indecision throughout this area. You can see, if I zoom in a bit more, I'm on the daily chart right now. These kind of candles here are basically saying the market's not sure. Okay, so we just got to watch and see. But what I can see, and we can probably trade this, is if we step into a 4-hour chart, who can see it? Can anybody see anything there? Anyone? No? Okay. What I'm looking for is I'm looking for an early indication, so that if, for example, if the euro comes out and adopts a quantitative easing policy, okay, the euro is going to get weak, and this should drop. Okay, the Japanese side of the equation has to be adopted as well, but I'm looking for an early opportunity to short this. All right, and it's moved quite a lot. Remember, we're talking about going from 134 to 148, so it is a big movement. So I'm starting to look for, and there's a couple of things that I can see. All right, now what I like to do is I like to start to draw lines on my charts. I can see that we're starting to possibly this could be a line that's going to be respected, so I need to watch the behavior as we go there. The other one that I can see here is I can maybe start to see a bit of a triangle forming at the top. If I go for that one though, I do need to adjust my bottom line a bit better. We would be in there somewhere. Now I'm not sure if that's the spot. I'm not sure if this is the correct spot yet, so what I need to do is I need to monitor, because I may have to, it may be a triangle as such, okay, or it could be one of some kind of an angle. But what I'm trying to say is it's starting to happen, so I need to watch it. For right now, I don't really have a trade for us. If I was going to have to take any kind of trade, it would have to be on the long side. All right. There is no divergence showing me. There's nothing really that is hitting me in the face, other than that I'm just watching the market starting to pause, starting to looking like it's running out of energy. So, and what I'm trying to do is I'm trying to find the first opportunity to take a clear signal as a short. Okay, so as homework for this week, what we can do is we can watch. We're going to have to watch it and just keep adjusting this line however it may need. So what I'm trying to say is, if we find we're at 148 right now, and if the market drops down and hits this line, well then now I can confirm that there's my triangle, and I'll start to look for the trades. Okay. So that's the euro yen. Kiwi dollar. Okay, Kiwi dollar is very, very easy. We're still range trading. We're right in the middle of it. You can see that the area that we've drawn out, we've been in there, and we can see that we're right there. We're virtually, like almost smack in the middle of it. It's been going on since September, since it started over here. That's the 29th of September. So we're there for the last 2 months, right in a range, and until we kind of come out of it, the market's not giving us a clear direction of which way it's going to go. So the only type of strategies that I would be willing to trade within this would be ranging types of strategy. And the way that I would do it is I'd just step in a couple of time frames and then look for bounces of things like Bollinger Bands and so forth, or look for inside channels. So let's have a quick look to see if anything shows itself. I'll go into a 4-hour chart first of all. Okay, I'll leave that grayed out area because it reminds me where the range is. Okay, let me just inspect a couple of things here. Okay, so can you see that I've got a channel inside of a consolidation zone, guys? Can we see it clearly? Someone said that there's a railroad here. Yes, there is. It's on a 4-hour chart. The only thing about this railroad, Brett, is that remember when we did last Thursday, when we talk about railroads, I really want this side of the chart immediately to the left to be clear, and it's not. I've got this big cluster right next to it. So this, if that had happened over here, for example, that would be really good. But where it's happened over there, it's not. And one of the reasons that it's created a railroad is because I can see all the gap traders trying to close up this gap, today's gap. All right, so the price was driven in one direction, and then it's driving back trying to close this gap. All right, but we do have a channel, so feel free to trade this channel. I'm just looking. Basically, I can't see a trade. There's no trade set up right now because we are also right in the middle of the channel. Okay, but what I'm going to be interested in is when we come to these areas. Okay, so Now there's three types of trades that I can look for. This is number one. This is number two. And this is number three. Okay. Now with trade number two, you need to keep in the back of your mind also the outside perimeter of the consolidation zone. Okay. So you may want to collect some profit before you attempt to cross over that area here. Does that make sense to everybody? Okay, because you've got to remember we're still trading inside a larger consolidation zone, and we've identified a nice channel, and the Kiwi dollar has been swinging beautifully. As a ranging currency, your ranging strategies will be doing very, very well with this particular pair, especially for the last month. Okay, so there's three trades on offer. We need to wait for them to come back. Alois is asking me, what about if we use a Bollinger Band? Let's throw one on and let's see what it looks like. Okay, if you're using a Bollinger Band and you were using, there was a strategy that I showed probably due to show it again, but it's basically what we said was when we find the ranging zone and you get the price come and touch the Bollinger, like right there for example, okay, place a pending order, say 20 pips below that, like there somewhere, to basically go in the opposite direction. All right, so with strategies like this, you tend to find that they can work quite nicely. You can look throughout, see this area over here, it's getting messy. You put your pending order over there, okay, and the market does drive back. All right, so if you apply that through this area, there's lots and lots of winning trades. Okay, Alan saying fishing strip. Okay, let's have a quick look at it. Let's see how it's been performing. And one of the good things about the fishing strip is that you can easily check if it's been doing well or not. My chart's getting messy, but let's just zoom in one more. I'm on a 4-hour chart here. There hasn't been many signals. Let me just step into a 1-hour chart for a moment. See, one of the use of the fishing strip strategy, Alan, and for everybody out there, we need to kind of push the extremities a little bit more. So you're not going to get many triggers. What we're observing something on a daily chart, and all I've done is stepped in one time division to a 4-hour chart to try and capitalize on it, and the fishing strip's not going to help us out. Probably the best if you just use standard Bollinger Bands and try to use that other strategy that I said, when we touch it, put in pending orders, that's going to give you a much better result. Or alternatively, try and find channels within the area. And let me just get rid of those Bollingers now. Because there are channels everywhere. If you look over here, before we had channels occurring, okay, so you will find them everywhere, and it's going to give you a much better result. All right, so for this week, all I can say is we're right in the middle of this range. We're right in the middle of the channel within the range, so I need to wait to get to one of these borders before I can act on it. All right. I've been trading the Kiwi dollar a little bit, so I'll try and keep an extra alert. So keep your eye on Twitter if I send something across. Okay. All right. And the last one for this week, Euro Aussie. Euro Aussie has also been in a range. The only problem is that it's been a range. It's a monster range. Okay. And for, I guess, traders with a lower let's just say this, not very risk aggressive traders, that range is huge. It's about a 400 point range. All right, so the swings have been very big and very volatile. I don't really like anything on the Kiwi dollar, on the Euro Aussie. The only one thing that I can see is if I step into a 1 hour chart, you can see that we've also got a gap that occurred. All right, and this gap is actually bigger than the other ones because it's been double accentuated because there was gap in nature on the Aussie and there was gap in nature on the Euro. So this particular gap's about, well, it's close to, I measured it before, it's nearly 50 pips. Okay, so, and the market's going to attempt to close it. I don't want to trade it, but it's going to attempt to close it. We just got to keep an eye on it. And one other thing, keep an eye out on divergence on a 4 hour chart. All right, this divergence is a little bit more advanced than the one that we saw on those other charts, and this one looks like it could be confirmed very, very shortly. Okay, if that happens, it'll push it down, close up that gap, and we can get a nice trade out of it. Okay. Any questions on anything that we've done this week? Let me just quickly summarize while you type away. Okay, first of all, last week, I don't want to forget this, we got stopped out on something last week, and I think it was the Euro Aussie. No, it was the Aussie USD. We got stopped out for 20 pips. Okay, we did pick up a gold trade, which we picked up 260 pips, so that was quite nice. We do have a sell stop for a longer term trade on the Euro USD, entry at 123.45, stop at 126.05, target 120.85. So it is a long-term trade. All right. Let me just go through the charts very quickly. We're monitoring a channel on the Aussie dollar. Okay, so we're interested to see this divergence, okay, and the behavior. So keep an eye on that one. Euro USD, we're already short for those of you who took it on an inside candle trade that was triggered Friday, and we're just monitoring that. GBP USD, we got an expanding, let me draw it out so that I try and remember. We think we've got an expanding region, so we just got to keep watching that. Gold, we're not doing anything this week. US yen, we're watching, okay, gaining experience. 120 is on the cards. Euro yen, this is close, here's a 4 hour chart. Over the next 4 or 5 candles, we may be in a position that we can lock in this top line, and then we start to look for our trade. Kiwi dollar, we're in a channel. Let's see what happens. Gap coming up as well, and the Euro Aussie divergence with the force trying to drive this price down to close that trade. That's all I got for you this week. Unfortunately, I don't have any trades that I can place right now, but there's a couple of really good setups there, so we keep an eye on it. We can see if we get triggered in and if we play it out. So I think most of the trades that have been doing better for us have been the pattern ones where we're waiting for the breaks, because a lot of them have come good for us. So let's hopefully it happens again, and we'll see how it goes. Okay. Other than that, that's it for today. If you have any questions, send them through to me. If you want me to check your charts or at those critical moments, I'm happy to look at them. I will see you all on Thursday, where we will do the second part of price action trading. We'll cover in a little bit more detail. I went back and listened to that class, and I was a bit light on stop placement and entries on specific configurations. So I will go over that for you, and we'll have a look how to utilize it a little bit better during resistance range trading. We did trend. We're going to try and do a bit more resistance and range trading with price action. Other than that, have a great week, and I'll see you Thursday, 3:30. Bye for now, guys.